So bullish cup is obviously this shape, like a U, and then a bearish cup and handle is going to be the opposite, where you're topping out. Ideally, you want your resistance line, which I've got marked here in red. You want the left side of the cup and the right side of the cup to have fairly similar resistance points. You're looking for more of a U shape than a V shape. U's are going to be a little more reliable, and you're playing this cup as a, if you're going to play the trade, you're going to play a breakout, continuation on. Strong cups are going to take 1 to 6 months to develop. This one is close to 3 months, 93 days, and that's to the actual breakout. It's almost 4 months, 101 days. When it comes to when the cup gets created, there's a lot of times that the handle gets destroyed, where it just doesn't hold up. So you don't really have confirmation of a cup and handle until the breakout. And for it to be valid, you need the handle to retrace, or you don't want the handle to retrace any more than a third or a fifth, third or half of the cup. So you've got your full distance of the cup. If you fib the whole cup so that the resistance to the support, this is a third of a retrace. This would be 50% of a retrace. If it goes beyond that 50% point, honestly, it's not as valid of a handle at that point. You're probably breaking down. So you can see this one is valid. It retraced about into the middle of these two areas, and then it also broke the resistance with some momentum. So maybe this is on a daily, but maybe if you had seen this, you would have got a chance to enter, if you're looking on the 1 hour chart. So, looking now, we've zoomed into the 1 hour chart. You did get a chance here to enter on a little bit of a retrace. Depends how, well you've drawn out your cup and handle, obviously. You're placing your stop loss. The safest place to put your stop loss is obviously going to be outside of the handle low, which is here. Sometimes that's going to eat into your risk reward, but again, it's not really a trade worth taking if it retraces beyond the 50%, because also your stop loss is then going to have to be way down. If it goes to the 618, which is going to be down here, it's just too big of a stop loss. So the shallower the handle, the better, especially for your risk reward taking the trade. Same idea. If you measure the low, so you basically from your support to your resistance, duplicate that distance, you can target that same distance. So, with the stop loss being there, it's only at 2.18. So it is a swing trade. You could definitely risk a little bit more when you're playing the daily chart. You might want to risk 3-4% of your portfolio on swing trade versus looking at trades on the 1 or the 5 minute chart. I'm going to get rid of the bearish or the bullish cup and handle. We're going to look at a bearish version now. And you basically got the same kind of pattern. So you've got this obviously upside down U pattern. You've got the handle with a high over here below the 50%, so a shallow enough handle that it makes it valid. You get a break of the support with momentum, so a big candle. Again, looking at the 4 hour, I would jump to the 15 minute, but I'll just lose everything, so I'll not bother. But probably if you're watching this closely, you're probably on the 15 minute chart. You probably got a bit of a quick retest of the support, now resistance. You could have entered. Again, stop outside of the handle. and take profit is the same distance as the cup. Could have left a runner, but you also like want to do your smart money concepts. If you do that, if you know what that is, some of the things that we've already talked about, you're still going to map out your daily support and resistance, so to see where price might fall to.